Hello and welcome to the Short Vol Show live. Coming up, the VIX party continues. The market continues to rally. All kinds about stocks and how are you doing starting this trading year. That and more coming up next on the Short Vol Show live. Stay with me. Welcome to the show today, and we have had quite the first week of January with the markets rallying and the VIX coming in, and today we can finally safely say that we are in Contango, although the VIX term structure is very, very flat here. I wish it was always this easy. I did short volatility by buying a VXXB vertical about 10 days ago. I bought the VXXB 47.45 put vertical, paying a buck. I think I paid $1.05 for it. And that was with VXXB around 47 and change, and now it's down to 41. So we definitely have seen the volatility come in. Let's take a quick look at the VIX chart, and we can see, of course, the contraction in volatility over the last couple weeks. And you can see this is just a widened out chart. Let me move myself out of the way slightly here. And you can see the spike that has a spike in February at the beginning of the chart, and the most recent spike with volatility coming in afterwards. And it seemed easy for somebody who was shorted because I shorted the VIX when it was way up here, and it's just gone down every day, and I've just left the position on. So it seemed like easy street, and I can tell you trading is not always that easy, believe me. So here is the chart for the last week of the VIX going pretty much straight down, and then if we pull up UVXY, similarly straight down. Let's take a look at the term structure really quickly here, and for that I'm going to go to VIX Central, of course, and the term structure is very flat now. When it's shown graphically like this, you see this big kind of curvy shape, but actually it's very flat from valley to peak. Here we have less than 1 point, so things really flat here. We did dip below 20 on the VIX earlier today, but we see the first 2 months actually in Contango now. Yesterday they closed right around flat, and today, if things stay like they are, we will close in Contango. Now remember, most of the time, historically speaking, the term structure is in Contango, so we're returning to normal now, really. However, in recent history, what we found is as soon as this thing turns back to normal, we get a spike again. And certainly, I know there are people out there saying, wow, this is a good time to buy a VIX ETP. I did get someone in my StockTwits saying, you're definitely going to buy TVIX now, right? And I know a lot of people will be looking to buy volatility here as it's come in so much. And there is really no penalty right now very much for buying volatility as far as the term structure is concerned. We're really a very flat term structure right now. So don't base buying or selling based on the term structure, based on your view of volatility right now, because the term structure is pretty much irrelevant with it being so flat right this moment. Now, there's been a lot of talk and analysis of where we are in the chart of the SPX or the E-mini. So let's pull that up for a second here. And, there's been much talk of this quote-unquote volatility box up above here and whether we're retesting that or not. It seems like we're hitting the bottom of that spot that we were in for some time. Let me see if I can widen this out so it's a little bit more clear here. That's not the best chart of it. But anyway, there was this much talked about volatility box that we were in that we're just touching the bottom of now, and whether that what used to be support is resistance now, et cetera, et cetera, et cetera. And there's been a lot of talk about whether this rally is a quote-unquote healthy rally or unhealthy rally, or if it's going to turn back and go back down. But so far, we've just been rallying slowly every day, and volatility has been coming in nicely. So I can't make any predictions about what will happen in the future, as I never can. But things have worked out, and, you know, sometimes you just have to be grateful that things work out in your favor and not ask too many questions. And indeed, you know, I bought the market, and I bought XOP, which is like buying oil, a while ago, and it's all just marched straight back up, and so I'm grateful for that. And my month is going okay, and so, you know, I really am thinking about maybe taking my position off and just keeping that positive month and just putting it in the books for now, because that's my goal right now, is to get things going month by month, just positively. And it's been going well so far. I've made hardly any trades this year. I just put on this short trade and got long some of these stocks and have just let it continue to ride, since it seems to have been going my way, which I'm grateful for. I was talking a little bit about on Twitter, you know, if you don't have a lot of followers on Twitter, maybe it's because you're not someone who's interesting to follow, and trying to artificially raise your Twitter viewers, it doesn't make a whole lot of sense. You know, I was looking at some of these follow for follow type people, and what it is like you add this list, you like these people, and then you follow them, and then they follow you back, and you gain followers that way. So you'll see people on Twitter that they've got like 4 million followers, but then they're following 4 million people too. And when you see that, you realize that the person has built up how many people are following them by following others. And it's kind of like, it doesn't seem like that's really what Twitter's for. If it's one of those things where, like, be comfortable with where you are. If you don't have 50 million people following you, maybe it's because you're not like in an industry, you're not like a newspaper reporter or something, or you're not someone, or a celebrity or something that has all these people that are interested in you. That's perfectly fine. But, you know, building up this big thing of followers when you're putting out zero content except saying follow me back, why should someone follow you just to get more followers? It's like, does the end justify the means, and are you actually producing any sort of content? Anyway, I got caught up in this for a little bit because I was like, oh, well, I'll get more followers by following people back, and then it becomes this whole thing of like, well, did that person follow me back? And, oh, I should erase that person because they didn't follow me, and all this other stuff. And my news feed, you know, it used to be really interesting, and I had all these interesting trading people in my news feed, and I erased a bunch of people that weren't following me back, and now my whole news feed is like spam of follow this and follow that, and so I kind of messed that up. So I would recommend to you, just leave your Twitter the way it is. If people want to follow you, that's great, but have it grow organically. Don't try to like force it with this follow back stuff, because it's just not interesting, and it gets really, really spammy. Anyway, as I was saying, I'm grateful to be starting the first month of the year off well. I'm one of these people that I do my taxes like right away and try to be the first one in. And so I was very concerned with the government being shut down about taxes, but they seem like they've addressed that. They've announced the first date to file taxes is January 28th, which is pretty typical for every year. And they've said that they will have funds to pay refunds. So I'm excited about that. I've been working on my taxes. I like to do my taxes myself instead of having an accountant. I know it's complicated, but I like to keep control over the process myself. And so I've been working on my taxes recently. I hope that with this channel, I don't want people to think that they need to do exactly what I'm doing as far as positions. That's not really the point. The point is really to just give you somebody who's trading with you, and to let you know that even the pros don't have a perfect day every day. Even the pros don't make money every day. And the pros have the same, you know, growing pains and problems that you do. So it's to make you feel, if you're out there trading, that you're not alone, and to let you see that the hardships that you face are the same stuff that everybody faces. So when you see people saying, I made 200% this week, our team of guys, 12 of us, we each make 200% every week, just know that that's not possible. It's like seeing people with the scratch tickets saying, oh, I win money on scratch tickets every week. I'm just good at playing the lottery. That doesn't even sound right, but people kind of get caught up in this stuff. It drives me crazy watching people with the scratch tickets, because I see people just give away all their money. And, the more times you play something, let's say there's a scratch ticket that has 65% odds of, you get 65% of your money back overall. That's the odds. So if you play with $100, your expected return is 65 you get back. Well, the more times you play that scratch ticket, the closer your actual results are going to be to the odds. And so why would you want to do something where you're going to take $100 and turn it into 65 over time? It just doesn't make sense, but people still do it. And we like to try to show with trading that you're going to try to move the odds into your favor and make them at least 50% in your favor before you're going to do something. Because why should you do something when the expected return is negative? But anyway, people still continue to do that no matter what. This has been an exciting time for the VIX, and it has shown us what can happen in the extremes with the VIX products. As we normalize here and things come back to normal, this should give you increased confidence about how you're going to set up your positions and how you should hedge yourself, because we know that even if shorting volatility usually works with VIX ETPs, that extremes are going to happen where it's going to blow up in your face if you're not hedged and if you're not careful. So let's just talk for a second about some strategies to short volatility right now. And these things have come in a lot. So if I look at UVXY right now, and that's a far out chart, so that's not going to be very helpful. If I look at UVXY right now, it's come down from 94 to 67, right? And so in my personal opinion, it would be kind of aggressive to short it right now. I would rather be patient and wait for at least some sort of spike up. At least, we can't have an up day every day. There's got to be a down day. So I would wait, just like with anything else. When you want to buy a stock, you're going to wait until the stock gets beaten down a little bit before you buy it. And the same thing with the VIX ETPs. If you want to short them, you're going to wait until you get some sort of pop, because a pop will come, folks. The VIX actually sort of oscillates. It oscillates up and down in a certain range. And you can see it right now. It's about halfway down through the range, through the average. And it might continue going down. However, it just doesn't seem to me to make good strategic sense to short something when it's come down from 36 to 30 to 20 on one down run, going straight down. It seems like you've kind of missed the boat to short it right here. And yeah, it might go down further, certainly, but it just doesn't seem like the best strategic thing to be shorting it, chasing it down right here if you're not already to short it. On the other hand, just because it's come down this far doesn't necessarily mean that it's going to pop straight up from here. If we look at the VIX historically, it is actually right in the middle, and that is borne out by the term structure here that's completely flat. So there's basically no bias right now for the VIX as far as if you look at it historically, if you look at it basically on what's been happening recently. Yes, it's cheaper than it has been recently, but historically it's right in the middle. And yes, it could pop from here, but it could also go very much lower. So I know that's not very helpful, but I'm not here to tell you what to do. I'm just here to help you talk it through and to kind of hold your hand through the process here of trading. So yes, we're right in the middle right now. Everything's completely flat. And, it's funny because I remember people coming up through the ranks when I was on the floor of clerks, and they get on a badge, and some people just got sort of stage fright and wouldn't do anything. And, the best way to break the ice if you're a new person is just to trade anything small, but do something, do anything just to get yourself engaged. And it's the same with trading the VIX. If you've got no position on and you haven't had a lot of experience with this stuff, just do anything. Buy one call, sell one small call spread, buy one small put spread to get your head in the game and get engaged and go on from there. If you're a little bit more experienced, then you're going to become a little bit more sophisticated. But like I said, right here, we're historically like right in the middle of where volatility has been, and that's borne out by the chart here. And the trend right now is volatility is coming in. That's the current trend. However, if we look at the E-minis, that trend is kind of like the opposite right now, because we're still sort of on a downtrend. It depends on which chart you look at, but many charts we look at, we're still kind of on a downtrend, and it looks like it could turn back down at any moment here. So really inconclusive as far as the charts go. Now, I'm not a big chart guy, so I always think the charts are a little inconclusive, but there's no real clear bias as far as I'm concerned, I guess is what I should say. All right, now a lot of people are asking what to trade now that VXX is going to be gone. I've chosen VXXB, although I have noticed that there's not a whole lot of liquidity. The marks can be really weird, and when I try to trade stuff mid-market, it doesn't happen that much. There's not a whole lot of liquidity here. I know that Vance Harwood was bringing forward the idea of trading VIIX, which is a Credit Suisse product that's newer, and you might want to check that one out, trading 1751 right now. I know this is optionable. When I look at the options open interest on here, there isn't a whole lot of open interest. I haven't tried executing trades in this one yet, but might be a good possibility for you. UVXY, let's take a look at the open interest in UVXY and see what's been trading in this one. I think this is probably going to have your biggest open interest right now. Options-wise today, 16,000 options have traded. If we look at VXX, 70,000 options have traded in VXX. Now remember, VXX is gone at the end of the month. If we look at VXXB, only 4,000 options have traded. So that's kind of the story right now, is that nobody really knows where the paper that was in VXXB and is in nobody really knows where the paper that in VXX is going to go to at the end of the month, because obviously 70,000 options contracts today is a decent amount of paper compared with these other products. But for my money, VXXB is almost exactly the same thing, and so I'm thinking the paper will probably go to there. Now, it doesn't bother me that much that there's not a whole lot of liquidity in VXXB, because I know what position I want to put on. I want to put it on for a decent period of time, and I was able to get into it. Maybe I was able to massage into it in mid-market, and I know what prices I want to put things on for. If you're just going into trading a spread, for example, and you don't have an idea of what its value is before you're bidding for it, it's easy to get confused, because markets widen out a lot, and just taking the midpoint between strikes might not actually be fair value for the spread, just depending on maybe a small book is there, or maybe stuff is widened out because a number's coming out in a few minutes. A lot of times at like 10 a.m. a number will come out, and it will skew the markets all around. So I go in frequently and check out my spread. The spread I have on right now is the 15 Feb 47.45 put spread, and I'll frequently go in and just take a look at the market. I know right around now it should be worth about $1.40 to $1.50, something like that. And when I do look at this, the midpoint's $1.50. So there's 37 days left on this one, and right now VXXB is around 41. It needs to be at or below 45 for maximum value on this spread, and the spread will be worth the distance between the strikes, which is $2 in 37 days, as long as VXXB is below 45. And so there's still 50 cents left in the spread, and I think the odds are that it will come into $2. And so I'm going to just leave it on for now and you know, wait out the other 37 days. In the meantime, you know, we do have earnings will start coming up around again soon, and there's action in a lot of other issues. For ideas, I would check out Gorilla Trades first of all, and then I would also check out barchart.com, which has which I always like to look at. Let's just check at barchart.com for a second out here. I like to look at highest implied volatility, and then it will give me, and then I'll look at different stocks, but I'll try to find stocks that are the higher priced ones, because like a $3 stock doesn't interest me for trading options. It's just not helpful. And we see Tilray, Roku, WDC. Let's take a look at WDC for a second, because I'm not familiar with that one. And Western Digital. And you can go and you can check out an issue that maybe you're not familiar with. I would look at like the open interest and the options, and there's not a whole lot of open interest here, but there's something trading. Then I might look at implied volatilities. And then I might just look at kind of the actual dollar value of stuff. So for example, this is a 60, why am I in the wrong, I'm on the wrong thing here. What do we say, WDC? WDC. I may look at actual, so it's trading $40, so the straddle in February is about $5. So there's some premium in that. Let's take a look at our old friend Tilray for a second. Now Tilray, once again, supposedly the float's going to be greatly increased on January 15th, and you know, the common idea is that means it's going to sell off a lot, and it's just ripped to the upside in the last yesterday's session. And I kind of predicted this in a way, saying that like it seems so obvious that retail would short this right before Jan 15th, because that's when it's supposed to dilute, and thus it would probably go straight up just to rip everyone's heads off who does short it. However, now that it has ripped up a bit, maybe it does go lower on the 15th. We're getting pretty close to then. But Tilray, all over the place once again, and volatility. Let's take a look at where it says volatility is in. If we go to our Analyze tab in Thinkorswim, I know I've addressed this before, but just to do this once again. If we go on the Analyze tab in Thinkorswim, we can go to today's option statistics, and it's going to tell you implied volatility and where we are in the range. And it shows current percentile 0, but that's actually doesn't make a whole lot of sense, because it shows implied volatility 136, low is 58, high is 152. So we're actually pretty high in the range. So this thing that says current IV percentile 0 is not accurate. I don't know why it's giving that reading. Because volatility has, of course, pepped up in the last couple of days, seeing that this has just popped. So this is inaccurate. I don't know why it says that. 0%. That's suspicious. Obviously, 136 is between 58 and 152, and it's on the higher side between the two. So let's just look at options prices directly in here for a second. And if I set my layout here, we have adjustable layouts for here, and I switch a lot between volume to see what's going on. And there's decent volume here to implied volatility. And it's showing 36, which is bizarre. Oh, well, let's get... And let's see, $83. So the Jan straddle with 9 days to go is, let's see, something's funky about this. Hard to borrow. well, the puts are skewed way up compared with the calls, but I think that has to do with it being hard to borrow. But something's a little funky with my charts here. Maybe I have some setting wrong. Let me take a quick look over here. Individual volatility. Anyways, it looks a little funky in Tilray, but safe to say Tilray volatility has popped up a little bit because we did get that big rally in the last session. And we'll have to see what happens moving forward here. Obviously, I was talking against shorting this just because it seemed like such an obvious play into the dilution. However, with this recent pop, it does become more of a compelling short than it did down here at 70, right? I mean, it ripped up here. Look at the range on the open here today. I mean, this is proving to be a monster stock once again, Tilray. So interesting. I'm going to keep this on my watch list, but I definitely think that there are some possibilities with this one. Let's take a look one more time at some volatility here. You know, it's hard to judge because it has all this good news stories and stuff, but it is being diluted, and some of these shares are coming on the market January 15th, but we don't know if some of these people who are long these shares have already hedged them in a way. And so we don't really know exactly how significant January 15th is. So this one remains to be an interesting one to trade. And as I said before, when don't look at things so simply as, oh, well, it's going to be diluted, so it's definitely a short on January 15th. It's definitely going lower, because you can see right here, if you had taken that opinion here around 70, you got your head ripped off. The stock market is more complicated than somebody just doesn't leave money on the table for you to jump in and get. I mean, obviously, whoever was in the mind of buying Tilray knows that the dilution event is coming January 15th, especially big players. And nobody's just going to stand there and buy a stock from you that's going to go straight down right after. It just doesn't work that way. So there you have it on that one. A lot of people have been talking about Deutsche Bank. I tend to think it's going to come back at some point, but there's obviously mixed views on that. A lot of people talking about GE, which has really kind of rallied a little bit recently, and our big FANG stocks, Apple up $3 today, and Facebook up $1 and change. Facebook's been rallying recently, and Apple kind of sideways. Let's take a look at Apple, backing it out a little bit. Yeah, so thank you for your patience with me. I did get food poisoning for a little bit, but I appreciate all the support and all the Patreon support from everybody. And I will see you in the next one as we move forward. I hope that you are keeping it small and trading them up, and I hope this month has been profitable for you so far. Please feel free to reach out to me with any questions, ideas, comments, negative or positive, and I will get back to you as soon as possible. Thanks for watching the show today, and we will be broadcasting more regularly moving forward. I will see you in the next one, folks. Bye.